Hello everyone, I'm Novira EQI Qinanti, with NPN 25,412,046 from Accounting Major. Today, we'll learn about basic concepts, accounts and normal accounts balance.
Don't worry, we'll make it fun and simple. Let's find out how accounting helps us understanding money, business and balance.
Accounting is the process of identifying, recording, classifying, summarizing, and reporting financial transactions. Accounting is a systematic process. 1. Identify like recognize economic events. 2. Record like chronologically log transactions. 3. Classify like group similar entries. Financial transaction, income, expense, payments, reports. Summarize and report. Transaction, summarize, reports, financial statements. Information for sound decisions, internal management, for planning, budgeting and performance evaluation, external stakeholders, for investment, credit and regulatory decisions. Basic concepts or principles. Let's look at the main ones. 1. Business entity concept. 2. Money measurement concept. 3. Going concern concept. 4. Cost concept. 5. Dual aspect concept. 6. Accounting period concept. Business entity concept. This means that a business is separate from its owner. The owner's personal money and the company's money aren't the same. For example, if the owner buys a new phone for personal use, that's not recorded as a business expense. Money measurement concept. In accounting, we only record transactions that can be measured in monetary terms in money. So things like employee happiness or reputation are important, but they can't be measured in dollars or rupiah, so they're not recorded in the books. Going concern concept. This concept assumes that a business will continue to operate for a long time, unless there's evidence it will close soon. That's why assets are recorded based on their original cost, not how much they could sell for today. Cost concept. Speaking of cost, this concept says that all assets should be recorded at their original purchase price, not at market value. For example, if you buy a car for your company for 200 million rupiah, you record it at 200 million, even if its market price later increase. Dual aspect concept. This is most important one. It means every transaction affects two sides of the accounting equation. Assets equals liabilities plus owner's equity. If one side increase, the other must increase too. So the equation always stays balanced. Accounting period concept. A business report their results over specific periods, like every month, quarter or year. This helps people compare performance from one period of another. Basic concepts or principles. The sum is, these concepts. Business entity, money measurement, going concern, cost, dual aspect, and accounting period, are the foundation of all accounting systems. They make sure financial information is accurate, consistent, and trustworthy.
Definition of account. An account is a record used to summarize increase and decrease in each type of financial item, like assets, liabilities, capital, revenues, and expense. Accounts. Each transaction affects at least two accounts, one debit and one credit, following the double entry system. There are 5 main types of accounts. 1. Assets, resources owned by the business. 2. Liabilities, debts owed to others. 3. Capital, the owner's claim on the business. 4. Revenue, income from operations. 5. Expense, the costs of running the business. Types of accounts: assets, liabilities, capital, revenue, expense. Each type of account has a normal side, either debit or credit, that increases its value. This helps accountants record transactions correctly and maintain accuracy. Assets and expense increase on the debit side. Liabilities, capital, and revenue increase on the credit side. If you remember this, you'll always know how to record transactions properly. Use DED click. DED means debit increase expense, assets and drawings. Click means credit increase liabilities, income, and capital. Example, when business received 1.000 rupiah in cash from a customer on December 5, 2023, the cash account increases in debit, so we credit revenue. Both sides remain equal.
Accounting concepts provide the foundation for accurate financial reporting.
Accounts are used to track increase and decrease in financial items, and normal balances show whether to debit or credit each account.